Good morning everyone and welcome to today's Trading European Open Live here at the Live Trade Room. Now today is Tuesday the 25th of September and just to touch upon what you can expect over the course of the next couple of hours. We look to take we look for high probability trading opportunities when we trade these financial markets, and we have a methodology that we can identify high probability trades that we will look to execute with consistency and discipline in our approach, and then our attention shifts to our ability to be very active when we manage those trades. So what we look to do is mitigate risk as quickly as we can, and we look to potentially book in profit as the price moves in our favor. So we're technical traders who look to cut or lose a short when they fail, when those opportunities don't materialize, and we'll look to let our winners run when we get those opportunities, when they do arise. So without further ado then, if I could draw your attention to our risk warning, please do familiarize yourself with our risk warning currently up on screen, and do take note of the risks involved in trading these markets. Okay, so let's before we begin, it's important that every trader will have a basic understanding of the news flow for the day. So that's any news events that could impact us adversely when we trade. So let's get up Forex Factory. And as we look through the day, we've had the governor of the central bank, Kuroda, due to speak. In fact, he's already done so. And he's just due to speak to business leaders. So when central bankers do speak publicly, the markets listen very, very carefully, largely to get an understanding about monetary policy and potential approach to interest rates and accommodation. We'll have a look at the charts. We'll have a look at the yen very, very shortly. It's been sort of weakening quite considerably recently, and I'll explain why. Also, as you can look through the rest of the day, we have an MPC member due to speak, which will impact the British pound, but very unlikely to do so. And the only other major news event for the day is a consumer confidence figure in the US. Of course, if consumers have confidence, they generally spend more. Spending more has a good positive impact on an economy. So we're expecting a fairly significant number. We don't really have a chart for this one, so it doesn't give you past details, but they are. This kind of number is really quite a positive number, and it's effectively just a composite index, and it's based on surveyed households. So it's a really tangible kind of feeling of confidence in the market, which is obviously can be pretty good for a currency. And really, what we're looking for is a deviation on the expected. So anything above 132.2 might be positive for the dollar, and if it's below the 132.2, then it might be marginally negative. We wouldn't expect a massive deviation, but perhaps we will get some. Okay, so that's the only sort of news that we really need to concern ourselves with, and that is outside the more macro, more turbulent events. For example, the Brexit negotiations between the UK and Europe. The sentiment keeps shifting from a soft Brexit to a hard Brexit and potentially a no Brexit. So that obviously has significant impacts, and we're seeing a little bit of the turbulence play its way through some of these markets. And in addition to that, we obviously have global trade talks as well between the US and China. So it'll be interesting to see how US equities, we can see how they've reacted so far. We'll be interesting to see what is potentially about to happen. And from a general overview perspective, there's a little bit of a disconnect. The US economy is obviously performing particularly well. The dollar's strong, and the US equities are performing particularly well. We just saw an all-time high there last week in the Dow Jones Industrial Average, and it's hard to say the same for the US equities. It's hard to say the same for the European equities. So with all this in mind, plus we've got increasing oil prices, and we know Draghi speaking yesterday can basically see inflation increasing. They're scheduled to look at increasing interest rates towards the latter part of next year. So the market viewed Draghi's speech as a hawkish event. So therefore the euro has reacted accordingly. Okay, so without further ado, then let's go through these markets, and we'll focus on these high probability trading opportunities for the session ahead. So let's start, as we always do, with the euro dollar. So we had an explosive move to the upside last week, and it's become a bit of a floor for this market, actually, the 1727. Even yesterday we broke above the 1802. We were looking to see if we'd get extension to the upside, and it never ultimately arrived. It just rolled over to the downside, but just bounced off that 1727 once more. And we're just sort of sitting at this level. So this market is very sort of much up and down, apart from one or two sort of really strong days. We're getting a lack of kind of outright direction in this market. So looking on then, or moving on to the pound dollar, it's kind of a similar picture. I mean, we are in a significant downtrend, so it's hard to suggest that the dollar is completely finished. It's performing particularly well. It's probably the market that is probably going to strengthen once more. And what would be the high probability trade for us in the pound dollar would actually be selling this market below the 30.54, which is last week's low. So yesterday we saw a little bit of an impulsive move to the upside, retracing a lot of Friday's sort of no deal Brexit sell-off, and now it looks like we could be on our way to the downside once more. So we obviously do prefer to trade momentum to the downside. That would be the trades that we would ordinarily look for, and we've had to deal with since the beginning of the month. We've had to deal with quite a counter trend move effectively in the British pound. So hopefully that will present some opportunities in the not too distant future. So we've had the dollar yen extending its growth to the upside. We do have a major level just above it, around the 113.32. So we're likely to see this market squeezing to the upside, and we do have the weekly level at the 112.87. So it is a market that we will certainly look at. It's just coming off those highs as we speak, back to the 112.87, and we'll keep a close eye on the dollar yen. I suppose the yen has been selling off across the board off the back of, if we look at the US equities, they're performing particularly well, and the yen is viewed as a flight to safety. So when there's a risk on approach in the markets, you often see the yen devalue somewhat, and that's really what we're trading here. So we're not effectively trading pound, European, or even dollar strength for that matter. We're actually trading yen weakness, and that is still likely to continue. But we shall have a look at markets elsewhere just before we get into those. Dollar Swiss, really strong, just nice little bounce off that level. So we're going to come back to a level. The weekly high is the first port of call, really, the 96.99 level. So we'll see if we do get this continued bounce off these lows. So our overall bias is very much to the downside, and we're currently getting a bit of buying coming into this market as things stand. Dollar CAD, we do like the idea of this market continuing its move to the upside. We are at a very, very important level for us yet again. I'm just going to get up my pen so you can see the level. So we've obviously got this blue ascending line, and when we get opportunities around this level, we can look sort of quite closely at them, and we're at that level once more. So purely from a support and resistance perspective, we've got this market pulling back, creating a double bottom, and now we are looking for the potential for the dollar to strengthen a little bit against the Canadian dollar. So that's the trade that we're looking for, and now let's go in and see if that can work for us. Now we've had a slight increase on yesterday's, or should I say Friday's little bounce back and little move higher. So we are very conscious of the potential that if this market breaks below the 28.88 to the downside, then it's quite a significant structural failure to the downside. So we're only interested in buying this market above the 28.86. So do bear that in mind if you do trade the dollar yen, the dollar CAD. And for now, we still expect this market to pick up a bit of momentum, perhaps when a bit of strength starts to come into the dollar. Maybe we can look at the dollar CAD. And the other market that we quite like the look of is the Aussie dollar to the downside. Again, for very, very similar support and resistance reasons. As you can see, when we get sort of these markets getting close to these levels, we do want to understand and look to see if we can capitalize on moves in these markets, and we have that opportunity again. Of course, we're at a lower price, but that's not overly such a problem if you're in a trend and you can identify that trend. So these are more the trades that we look for. We like the pullback trade on a momentum trade to the downside, and this is what effectively this is. This price action here is a little bit on the messy side. We've gapped much lower on the open yesterday, became quite bullish, and then started to sell off in the latter part of the trading day. So although it moved in our direction, it didn't really give us an opportunity yesterday to trade it during the hours that we were trading. And now we're expecting this market to continue lower. So that's the Aussie dollar. New Zealand dollar, again, we saw that move below the 66.66, and we were looking to sell this market yesterday. Never really fully got the opportunity to do it. We had the move that occurred in the latter part of the US trading session and closed, significantly lower. Now, eventually, again, it's the same idea. It's looking for opportunities to sell this market. We'd probably prefer the Aussie dollar and the dollar CAD, but the New Zealand dollar would be also another opportunity that we could look at, but we're very likely to look for the opportunity in the Aussie dollar instead. The euro pound, we tried to retrace a little bit of Friday's little no deal move in the euro pound. We retraced a little bit yesterday, and now it looks like we are potentially squeezing up to these highs once more. Very reactive to sort of news events and politicians talking to the market, so we're getting fairly instant moves higher and also instant moves lower. The pound yen just rolling over to the downside off the back of again Friday's price action and a bit of a retracement yesterday, and now it just remains to be seen whether we see some strength. If we see some strength coming into the pound, it's likely to push higher, and if we see some a bit of a pullback in the yen pairs, then we're likely to see this market perhaps moving down to the weekly low, which is 146.31. Euro yen just pushing to the upside. We've retraced a little bit of yesterday's sort of explosive move, but now we're sort of pushing back up to those levels. So a break above the 133.13 level is our weekly high, and we're likely to see this market just squeeze up to that level, certainly if we get some continued European strength. So really the high probability trades for us as things currently stand, and they can change very, very quickly, is the potential for the dollar to continue higher against the yen. We will keep an eye on the US equities. The dollar CAD pushing above yesterday's high, and the Aussie dollar pushing below yesterday's low. So we'll come back to these markets in a second, and we'll have a look at them in a little bit more detail. We're just currently experiencing a long significant sideways moving market in the gold. That's not ultimately a massive problem for us, because if we get a structural break of the 1214, it gives us a great opportunity to buy this market to the upside, and the same also applies to the downside. If we get a break below the 1187.31, then we would be expecting continuation to the downside, and basically the market sort of piling in to that level. So that is the gold market as things stand, just very much sideways moving. The oil market is an interesting one. It's creating a lot of anxiety. I guess we're just up at this level now, the 72.56 level, previously a strong level of support. So we want to see this price just break that level to see if we can get some continuation to the upside. The next level would certainly be up here around the 74.42. And there is the concern, obviously, increased oil prices means that inflation is likely to tick to the upside. And that is a concern for central banks trying to, and Draghi alluded to it yesterday, that he sees core inflation ticking to the upside. So, and a lot of that is oil based, is the cost of oil continuing to push higher. So it'll be interesting to see what remains of the oil markets, but we're just at this level, a difficult level as things stand. So really we want to see these prices break above that 72.50 level, or 72.56. US equities now gap down yesterday, kind of continued lower, or maintained that kind of low, and it just remains to be seen whether we'll get continuation. We got a strong pullback yesterday in yesterday's selling. You contrast that to the stronger pullback we saw in the Dow Jones, but that is off an all-time high. Today, will we get a little bit more continuation to the downside? We're not so sure, and we've got the Dow Jones selling off, but yesterday we saw the Nasdaq increasing in price. So clearly reacting to global trade talks and the war that's potentially going on with China, and the impact that has over the tech firms over and above the Dow Jones Industrial Average companies. So it'll be interesting to see how that unfolds. Now, we do eventually like the FTSE to the downside. We're getting a little bit of selling coming into the pound, so as a result, we're getting a bit more bullish price action in this market. Now, from a technical perspective, we've already run into previous levels of support, and they have the potential to convert to resistance levels. So we do expect this lower. So any movement below the 74.48 level gives us a good opportunity to see if we can capitalize on a move to the downside. So we will of course keep a close eye on the FTSE market. And finally, the Euro stocks, getting a bit of buying coming in today, but we're currently in this market from yesterday, and we do like to see this market, or we would expect, for the same reason as the British pound, this market to continue lower. If it breaks above the 34.36 level, then we're likely to see a complete breakout of a pretty significant downtrend, certainly over the last few months. So we're anticipating this downtrend to continue, and for the Euro stocks to continue lower, although we're currently experiencing a bit of a pullback in that. But we have our stop loss just placed above yesterday's high, so we've got a line in the sand if this trade doesn't develop for us as we would expect it. Now, if this market continues higher and fails to break the 34.36, it might be the right trade idea, just the wrong timing. So it may be worth looking at this again, but we'll keep a close eye on these markets as these trades unfold. So so we're left with our trade plan now. So So what we're going to do is we're going to identify, well, we're in this market from yesterday, so we're going to have a good strong look at the Euro stocks and see if we get this market rolling over to the downside. So far it's looking quite strong. So let's have a look at this perhaps on the bottom right hand corner of your screen. So we'll just create our trade plan. We'd also like to look at the oil market. We'll have a look at this. We'll have a look at this on a daily time frame just to see if we get this impulsive move continuing to the upside. And we've also got effectively $3 trades which we should look at. Let me put up. So we'll put the dollar yen just at the top here. We'll convert this side to in threes, so that's looking quite good. We also like the dollar CAD, so we'll stick this in the middle. And we'll stick the Aussie dollar just to the downside, just at the bottom here. Okay, so that's effectively our trade plan for the session. So these are the markets we're going to focus on from a high probability trading perspective. So you can see all three. We can see there's a bit of strength coming into the dollar yen. So we'll have a look at that market in a second and see if we can capitalize on a move lower. And we're keeping a close eye on the Euro stocks. However, we do anticipate this market moving to the downside, and we need this market to perform as per our expectations. If not, of course, we've got our stop loss in this market, and it's a small risk exposure in this trade. We're looking at a 15, 16. Let me zoom in and I'll just confirm it for you. Yeah, a $16 exposure in this market. So we're comfortable with that level of exposure. It's a small trade for us in a equity. So we'll have a look at this on a daily time frame, just to see if we get this little rollover price action. We quite like the gold market to continue, but we'd prefer to buy it above the 72.56. So we'll have a look at this on the 15-minute. So you can see the sideways moving price action. We were looking to buy this yesterday to the upside. We eventually got the move, but before, we got a kind of a sharp sort of pullback, and really the market just went sideways for the day. Pretty much was what we saw yesterday afternoon after a nice explosive move to the upside. So we will be looking closely at this market, see if we get a close above the 72.50 level effectively. So I'll just take this level just down a touch. And we want to see this market close above that. If that's the case, we might see some continuation to the upside. A little bit on the choppy side, so again, we'd prefer to sort of reduce risk on that trade if we do get into it. Okay, so the next market, which is looking like a positive opportunity for us, obviously we're going in line with the market trend, which is to the upside, but we do have to negotiate this 113.21 level. We're likely to get a little bit of a push to the upside up to that level. So we can look at this on the 15-minute time frame. So then we conduct, this is effectively multi-time frame analysis. So when we talk about trade identification, we look at daily time frames. We then go down and we look at 15-minute time frames, 5-minute and 1-minute, where we can execute trades on those smaller time frames. So we have a little bit of consolidation between these two levels, and as you can see, we're really struggling to break above the 112.94, just a little bit lower, 112.93. So we do like this market to the upside, and we can continue to monitor potentially this opportunity above 112.93. So I'll come back to those two trades shortly. Dollar CAD next. So you can see the trade idea, looking for opportunities to buy. If we look at the 15-minute time frame, conduct a little bit of analysis, we can see that this market is failing to break above the 29.65. We've got yesterday's highs just sitting in here at 129.56. And we're currently below that level. So what we need to sort of keep a close eye on is the potential for this market to just continue higher from this level. So just the fact that it's pulling back right now, we might still get an opportunity to get into this market, maybe even around yesterday's high. So we can keep a close eye on this level just sitting in here and see if we get a bit of turnaround price action in this market. So I just want to check yesterday's highs just quickly. So the high of yesterday's market, yeah, is the 29.55, which is this level here. Now, if this market breaks below the 29.51, then that is effectively a second structural failure to the downside. So, yeah, although we do like this market higher, we do need it to bounce higher from this level, purely from a trade identification and high probability perspective. So this is the dollar CAD. So let's see how it interacts with this 29.50, and we'll see if we get an opportunity to get into that market from perhaps a lower price point. So we're anticipating a little bit of dollar strength creeping back into the market. It will be interesting to see if we get those opportunities or not. And if we see that strength coming in, then we've already selected the markets that would give us the higher probability setups. So the Aussie dollar, we've already had this extended move to the downside, as you can see, well, a little bit of a move to the downside, and now we're currently experiencing a bit of a pullback. So if we identify these levels previously, preventing prices from moving lower, and then when you get a break of those levels, you know, we're not really providing a lot of resistance, support on the way down and resistance on the way up until you get those little breakout moves, but then you get a strong reversal to the downside. So a little bit of choppy price action in and around this level, but we're kind of technically back to that level now as things stand. So that's quite interesting for us. Really strong pullback off the lows, structural failure to the upside. So look, when we look at this market, we can potentially look for opportunities to sell this market around the 72.50 level, but we will need to monitor this market quite closely. So we could look at these markets on a 15-minute time frame to see if we can get those opportunities. So in terms of our trade plan for the session, what we'll be looking to do is to buy this market if we get a close above the 112.93 in the dollar yen. I want to draw your attention to a bit of an opportunity that might exist for us in and around this level. If we get that opportunity, we might be able to get in on the pullback. And same situation here for the Aussie dollar. Might be looking to sell this market on a pullback as well, although we're pulling back quite significantly as things stand. A few pips is not such a major problem, but if we break out and really explode to the upside, then it might discount it as an opportunity for us. And we've been planning an awful lot of trades this month that we've had to kind of scrap because price action has not really ultimately performed. So those are our trade opportunities for the US dollar. So we'll see what opportunities we'll get moving forward. The US oil market, US oil is just pulling back off the 72.50 level. We're currently at the 72.40, but if we get a close above 72.50, we'll look to get into this market to the upside, and ultimately we're looking at this price action in here, and we're expecting this market to continue lower, although we're currently experiencing a bit of a pullback in that market. So these levels, the dollar CAD and the Aussie dollar, we're watching closely. We don't want, these levels to be broken to the downside and to the upside to any major extent, but we'll wait and see. So that's our trade plan for the session. So guys, if you do have any comments, if you do have any markets that you like the look of, do let us know. Do post it into your chat box, and I'll be more than happy to answer any questions you might have. I'm just posting a little comment into the chat box. I've just got a comment there from you, Lars, so I'll just come back to you now very shortly. Delighted to have you join us. Okay, so yeah, good morning, Connor. Good to have you with us. Yesterday was a sort of a tough trading day in the end, wasn't it? And I don't know if you guys have been noticing as well, but we're getting an unusual sort of number of significant moves in the latter part of the trading day, whether it's reversals or whether it's explosive breakouts. I don't know if you've been noticing that, Connor. Literally since probably the end of August, we've seen a majority of the moves occur and in a latter, apart from some of the explosive news events, I guess, which basically means right now it would be much more beneficial for us to be trading between sort of 5 o'clock and 7 o'clock probably every evening. But we've experienced lots of situations like that before, and they do go through peaks and troughs and ups and downs. So it is something to not overly concern yourselves with, but it's just more of an observation. Lars, good to have you join us. Where can you find I assume you mean economic information, and how can I combine it with a chart? There's lots of sort of obviously news-based platforms. Sorry, I'll take this off for you. We use forexfactory.com, so just Google Forex Factory and you can click on the calendar, and it gives you these economic news events. And why we like the Forex Factory is it gives you the information in a really nice, strong, concise fashion. Like tomorrow, we've got a lot of major economic news events tomorrow afternoon, ironically, or evening, should I say, and these are all London times. You can change in the top right hand corner, you can change it to your time zone. So if you wanted to, I don't quite know why this setting is, yeah, that's better now. So look, you can select whatever time zone you happen to be joining us, and save those settings, and you can click on the calendar and it will take you all to these news events. But you know, you've got sort of news and market details and stuff, but we only use it for this particular purpose. So yeah, that's where you get your economic news from, or that's where certainly we get. I mean, there's a lot of platforms that can be used. We just quite like Forex Factory. We always have done. And it also tells you that the high priority or the high impact news events that we can really look out for as the day unfolds. And as you can see, the only bit of news event for the day would be 3 p.m. Would be a consumer confidence news event. And like we keep saying, that's outside of our macroeconomic geopolitical events, which we all hear about in the news every single day, and of course the markets are reacting in a very turbulent manner to a lot of these events with a certain degree of fear and anxiety, I guess, is built into these markets right now, and as a result makes it for quite challenging conditions. And there's no doubt about it, we've had much easier years trading these financial markets. You know, it would be our view that it's a particularly challenging year on a market front, and we've definitely had some great years where markets were free flowing and fast moving, and capitalizing on some major moves even within a relatively short period of time. Definitely much more challenging conditions right now. Yeah, Connor, it's made it a little challenging, that's for sure. We also have the Fed today. I think you mean tomorrow. You mean the interest rate hike? I think that's tomorrow, the 26th. So yeah, it'll be interesting to see the price action in the build up to that Fed rate decision. It's expected. The market is pretty much built into price. Yeah, you're probably right. If Trump wasn't around, and if there was no Brexit sort of turmoil and negotiations and talk of a soft Brexit and then a hard Brexit and then a no Brexit, it definitely makes everything a lot more difficult. Yeah, it would be so much easier, you feel. I mean, absolutely. I mean, if there's a no Brexit vote and it's worth sort of taking this on board, let's start. If there's a soft Brexit, if the link between the UK and Europe is substantial in whatever capacity, it's likely to benefit the British pound significantly. So we're likely to get a little bit of an impulsive, momentum-driven, directional move in the British pound. But also the opposite applies. If we get even talk of a no deal as we build up to the deadline, then we're likely to experience a pound devaluation. And either way, we'll be looking to trade it. We'll be looking technically to trade fundamentals. And you know, I just think about some significant price moves in the devaluation of the oil markets, the collapse of the euro and the British pound against the US dollar over the last few years, the gold market, the significant swings from highs to lows in the gold market over the last few years as well. So there's been lots of markets. The equities have been an interesting one, because we've been sort of making new highs now for the last year or two, and it's made them a little bit more difficult to trade. Prior to the last couple of years, you know, as the markets were kind of building up and threatening to push higher in terms of more sort of kind of normal conditions, then the trading those markets were a little bit easier. But once those markets keep making new highs with very shallow pullbacks and limited opportunities to get into them, then they've presented a slightly different problem. But so now we're just going through this little phase. I'm sure the big guns in this market equally have concerns and issues about taking big risks in some of these markets. They're almost probably adopting a bit of a hedge approach and see if they can make money that way. Because you just want to be super brave really right now to commit to a particular direction going into so much sort of headwinds. So yeah, it's just a sort of a general overview, but you know, don't be fooled. These are quite challenging environments, and if you can have a really strong understanding of risk management and protect your capital at all times, you're fine-tuning very, very important skills. And then we're just waiting for those next opportunities for these markets to open up. So Lars, I hope I've answered your question. I hope I have. If you do have any further questions or any comments to make, feel free to post them into your chat box. I'll be happy to answer any other questions that you might have. So things are unfolding a little bit better for us. We're looking for this market to kind of bounce off the 129.51. We're currently at the 129.61. So when you get this market just moving like this, maybe we should move down into the much smaller time frames. There's potential for the Aussie dollar to roll over to the downside. We might get that breakout in the dollar yen, and we're only a few pips away from the high now, the 29.65. So perhaps let's see with the dollar CAD whether we get a close above that level. If so, that could allow us to get into this market. The US oil was just rolling over to the downside, so we're only interested in buying this above the 72.52. So again, we kind of need the markets to conform to the trades that we look to take. And the Euro stocks just come off its highs just a little bit. We still expect this market lower. So those are the trade ideas, and I'm just going to take this those scribbles off the table and just look in more detail. So quite happy to buy the close in the dollar yen. We can buy the close above the 29.65, and the market I'd like to look at in a bit more detail on a smaller time frame. Okay, so we're currently just getting that pullback off those highs, and a little mini sort of structural failure off this level. So that's the Aussie dollar. It's just extending lower as we speak. But you could look at this from a 15-minute sort of price, and we're just beginning to get this little breakout of this level, with the expectation for this market to continue lower. So we'll have a look at it on the 1 minute time frame. And what we're going to do is we're going to look to sell it below the 72.45. So if we get a close below the 72.45 in this market, we'll look to sell it at that point. And we're below the 72.50 as well. And we do expect this market to continue lower. So okay, it looks like we're getting an opportunity on that sooner rather than later. So let's just see if we get that close, and then we're just happy to get into this trade at that point. So we just want to see a little flush lower. The same situation for right, so we're getting those moves now. We're looking at these on a 1 minute time frame. They're both moving in the direction in which we want them to move. So again, just from a consistency perspective, we just want to see the close in both of these markets, and then if we get continuation, so there's the close. It should kick in any second now for the dollar CAD. So so now we want to see, and what I'll do is I'll mark both of these levels. So consistently, as soon as this market ticks below 72.41, we want to be in this trade. Same for the dollar CAD. We know what risk exposure we want in this market before we get into it. We're just going to take one mini trade, some mini lots. So we've had our close above this level. So let's just see if we get that little tick. See, the reason why we wait for the close above these levels or below these levels is we don't want these levels to become resistance highs. So we're in the dollar CAD. We're probably quite close to getting into the Aussie dollar. So 60. So we come back to that stop loss in just a second. So just below this handle in here, So it's just a 15 pips stop loss in this market. We'd be looking at something similar for the Aussie dollar if we just get this market just ticking lower. We should just wait and see whether we get the same follow through to the downside in the Aussie dollar. Oh, excuse me, guys. Apologies. I was talking away there. Apologies, guys. Yeah, sorry, my fault yet again. I was talking away and I had the mute button on. So for some reason, I've got into a little bit of a habit of doing that, and for that, I apologise. So we're in a little bit of profit in the Aussie dollar. The dollar CAD is just ticking to the upside. The dollar yen, we're just going to. We do have the 1300 just above it, so maybe we get a bounce off that, and we maybe get into a bit of a pullback trade on the dollar yen. So we're going to exercise a little bit of caution. The Euro stocks is just ticking back to the downside. We'll continue to manage these trades. We're going to switch across to the live trade room, guys. So we do have our traders there as well. So we're going to switch across now. We'll continue to manage these trades. Please do read the description below if you are interested in joining us. We do have we make available over 76 live trade rooms every month. So hopefully you can join us for those. We are currently offering a 14-day free trial. So if you'd like to try us without any commitment whatsoever, please feel free to do so. And if you'd like to join us, then you can continue your membership just for $9.99 per calendar month. So it's just a small contribution to you accessing these webinars, and that's it. There's no other contract or any other information really, no other obligation or commitment or anything like that. So hopefully you'll find it excellent value. The details are below, and we'll switch across now. We're getting a little bit of a movement now in the dollar CAD and the Aussie dollar to the downside, so that's good. We're going to reserve judgment on the dollar yen just for the short term. So we'll switch across now while we're getting these markets moving. So we look forward to seeing you over at the live trade room. Yeah, thanks, Connor. See you soon. Thanks, Lewis. Apologies for the sound. I need to have a long word with myself when I finish this broadcast. So yeah, I'll be back to you guys very shortly. Everyone else, you're very welcome to click the link below in the basic information, and we'll hopefully see you over in the live trade room. So from everyone here, do take care. We'll speak soon. Bye for now.